Do you have the right insurance and investment strategies to protect and grow your business? On today's episode of Mind Your Business, we're joined by Burkat, a financial services expert with nearly 30 years of experience helping business owners secure their future. From term life insurance to smart investment strategies, this is the financial insights every entrepreneur needs. Now, stay tuned. It's time to take your business to the next level. Burkat has spent nearly 3 decades of transforming the way middle-income families and business owners approach financial planning. He is a licensed representative in multiple states. He specializes in offering tailored solutions like term life insurance, investments, and also customized financial strategies. Now, his passion is empowering entrepreneurs to protect their businesses, and invest in their futures. So let's get ready to learn how to secure your business and financial legacy. Now, before we dive into today's topic, I want to challenge you to think about this. Are you building a business designed to last, or are you just getting by? True success comes from planning not just today, but for the future. So let's shift our mindset to one of preparation and long-term thinking, ensuring that your business and finances are protected for whatever lies ahead. Now, with that said, let's bring on someone who knows all about financial preparation, Mr. Burkat. Howard, thanks for coming on. Thanks for being part of the show. I appreciate you coming on to the show and being part of it. And so, Howard, kind of what got you into the financial services industry?
So that's an interesting question. I was actually invited out to a meeting, and little did I know what I was coming to. And when I first saw it, it kind of was everything I hated. I mean, I'm an introvert, and I didn't like talking to people. So what really caught me was the opportunity to help people, and my main focus was the investment side. So I saw an opportunity, and over time, I learned it's really just conversation having with people.
So you're saying that you were basically an introvert prior to, and
I was.
And you know what? I find a lot of some of the best salespersons were once introverts that get converted into extroverts. Myself being one of those people that, like I said, it's always weird just kind of getting into something like this, or you're just really not used to talking to people, then all of a sudden you're talking to everybody, and that kind of gets you into a phase where you're just doing that. So how did you make that adjustment? How did that go?
The adjustment really was learning what to say, because no matter what you're selling, everything is a conversation. If you know what people are going to ask and you already have your answers, it's just a conversation.
So did that kind of like make it a little bit easier once you kind of put those two things together, and it's like, okay, I'm just having a conversation, just sitting down and talking?
It did, because going out and talking to people for the first time, it's always scary. But once you start doing it over and over again, it becomes natural. And as long as you know what you're talking about, it gets easier.
So I'm going to take it, you know what you're talking about?
I'd like to think so.
Great stuff here. So, you've been in this industry for quite some time now, and is there anything that you can really kind of share, like a memorable moment, anything kind of sticks out, a lesson over your years of experience in the industry?
A lesson. Yeah, the biggest thing is nowadays most people don't have insurance. And what people do is they rely on GoFundMe now. That and, passing a hat. But the main thing is protecting yourself and your family with the insurance.
Yeah, that is it's a rather newer phenomenon, or it's, and I don't know if that's more of, like a crutch in some sense, and some people kind of don't, or think because it has been successful for people to raise money in a short period of time, that's kind of like a thing. What are your thoughts?
So one thing is, nobody knows when they're going to die, but a lot of people don't like talking about that, or they don't want their family to benefit. They don't think that their family should benefit from their death. But it's really all about protecting your loved ones, because that's the last thing you're going to do for your family is leave them, what we call a legacy. Because life insurance can actually be generational wealth. But most people don't look at it like that.
You know what? I think it's a shame that most people don't look at it that way, because I think you can, in many instances, you can actually leave your next generation of family better off than maybe you got started, and
absolutely
not put them in positions of challenge where they're having to, even especially at a time when there's something, or when there's, like I said, someone passes on. And I know, unfortunately, talking about insurance is never sexy. It's never it's never fun. That's the problem. But it is a necessary conversation.
It is. I mean, everybody needs it, but nobody wants to talk about it. And the problem is, you never know when you're going to die. And when something happens, just for instance, somebody has a heart attack, they become uninsurable. You never know when that's going to happen, so you always have to be prepared. The younger you are and the healthier you are, the less risk a company is taking with the life insurance. So it's better to get it sooner rather than later.
And you find kind of like the challenges that I guess is the sooner at the point when the premiums are the best, the income is not the best. It's kind of like one of those kind of weird things in that instance. But so how do you kind of bridge that? How do you really talk to people about that?
Well, you'd be surprised, because when people are young, it's actually really cheap, depending on the type of insurance that you get. And the reason I say that is because there's two different types of life insurance. One is what's called cash value, and the other one is what's called term. So term insurance is very cheap when you're young, and most people don't realize that 20s and 30s, somebody can get almost $1 million for less than $100 a month. But most people don't look at that because they don't realize how much they actually need. Because people think, years ago, people were basically just sold burial insurance. And now it's a lot more, I wouldn't say complicated, but there's a formula to figure out how much somebody would actually need. And most people think, they have someone at their job, but that's usually not enough. So it's figuring out how much they need, what they can afford, but the term insurance is what we call basically wholesaling life insurance, because it's a lot cheaper and you can get more coverage for your money.
So yeah, that is how do you kind of help people figure out what that number is, or how to do it? But I guess even more so, I think the thing is turning the thought process around to where people can see that the living benefit of it, and how does that work? So how do you kind of broach that subject with people?
So that's really just educating people and showing them the value, because most people don't think about life insurance until they actually need it. And by that time, it's too late, because people usually already have an issue where they're not going to be able to get approved, or something has happened that somebody passed away and they don't have any insurance. But to figure out what somebody actually needs, there's a concept called DIME, D-I-M-E. D stands for death, I stands for income, M stands for mortgage/debt, and E stands for education. So for death, I automatically put $15,000 on somebody for burial expense. E is for education. If somebody has children under the age of 18, for 11 and under, I put $40,000 on them, and 12 and older, $60,000. And the reason is, if something happens to them, we can put that money in an investment for college education, and they can let it sit there, and hopefully they have enough by the time they go to school. Next is mortgage/debt. So if somebody was going to bless somebody to pay off all their debt, I asked them, what would that amount of the check need to be? house, cars, student loans. That's a big thing these days. Paying off all the debt, what would it take? And then the last piece is the eye for income. See, most people forget about protecting their income if something were to happen to them prematurely. So let's say we have a husband and wife both bringing in $1,000 apiece a month. They can't live the same lifestyle on $1,000 as they could too.
Right.
So for $1,000, we put $100,000 worth of life insurance on somebody. That way we can invest the money and they can live off the interest as if that person was still there bringing in income. So for income, I ask people, after all the debt's paid off, how much would they still need coming in on a monthly basis? And you're still going to have, food, clothing. Even if the house is paid off, you're going to have maintenance, taxes. So you're still going to need money coming in. You just shouldn't need as much money because all the debt's taken care of. So with that, they have to decide how much they need coming in on a monthly basis, and then we figure out the total amount of coverage that somebody would actually need.
So that sounds like a lot of calculations, but it's probably not even that difficult to figure that out. And it sounds like it's super important for people to kind of know what that number is or what those numbers are, and to kind of see how to prepare or to kind of put their family in a place where they can.
Correct. Usually the biggest thing is most people want more income than they have coming in now. But that just means that they're going to have more life insurance to have that income coming in.
So what would you say are some of in your doing this, some of the biggest financial mistakes you see business owners? And I want to kind of, our audience is business owners, people who have a business, and so kind of focus on business owners. What kind of financial business mistakes do you see?
So one thing that most people aren't familiar with is what's called key man life insurance. So let's say you have the owner or a VP that's very important to the company. If something happened to that person, God forbid they died, it would cost the business owner a lot of money to go and find somebody else to replace them. So instead of having the company pay for that expense, you can use the life insurance and put key man life insurance on somebody in case something were to happen to that person.
I'm glad you talked about key man insurance because, especially in the business world, I think it's super important. Again, I think even for, that's not really a succession plan, but even for somebody who is important to the business, and you're not really thinking about or realizing what that loss would be until it's almost
right.
Like the loss you do in a family, but it could be worse sometimes in some instances because that person is really key to how that business operates.
True. And I'll give you an example. So let's say somebody's making $150,000 a year, and they have to use a search firm to go and find that person. So usually what they do is they take a percentage of that yearly salary to find somebody for them. And let's say it's 30-40% of $100,000. That's $40,000 to find somebody new. So instead of coming out of pocket for that, you can use the life insurance to pay for that expense.
You know what? I don't know if you've encountered much of this, and I'm trying to remember what family I read about this, that they put life insurance policies on everybody, and they kind of did that to kind of create wealth as families go. And I think it's something that I think more people probably should kind of think about. And it's hard sometimes to think in advance or ahead to the next generation sometimes.
Right.
But what are your thoughts on it's almost like key man but for family stuff, it's like a family type.
It is on a personal, and I've heard like a lot of immigrants do that. What they do is they buy $1 million on somebody, and everybody shares the expense, because depending on if they're older, it's going to be really expensive. But what happens is when that person dies, they can go and buy a business or something, and then they do the same thing on the next person. And that's how they create generational wealth. Because most life insurance, as long as you don't include it in your estate, it's not going to be taxed.
Well, it's also, like I said, it's good to know that kind of information. And I know that, like I said, I think, or how do you feel like we kind of broach, or the best way to kind of change the way people look at this stuff to make it, make people look at it differently so that they approach it differently,
Yeah. Well, the only way to change that is more education. And stuff like that should actually be taught in school. And it's not. Because if people knew better sooner, they would have it sooner. But I think it comes down to education.
Well, I think that's a great point. And while we're kind of on the subject of really education, and so kind of why do you think most insurance and investments really are even overlooked for entrepreneurs? Why do you feel like that, or do you feel that that's a thing?
Well, I think it's overlooked because they were never taught about it. And most business owners are good at what they do, but typically don't know how to run a business. And unless you know about it, there's no way to figure it out unless you go and find a professional to help you with it. And unfortunately, a lot of business owners don't go searching out for that stuff. It's more about, running the business at the time and then worry about all that stuff later.
Yeah, some people work with the future self's issues or challenges, but at some point that future self becomes the current self, and you're glad when you did put some things aside and do that. And so is there anything that you also do, or how do you actually help business owners kind of understand the importance between, or separating the personal and also the business finances?
Well, I don't think it's really about separating them. I mean, the same concepts apply to both individual and businesses. But one of the things I started talking about with business owners that most business owners don't worry about is taxes. So in order to save on taxes, one thing they can do is set up a retirement plan through their business, where it's going to do two things. It's going to save money on taxes, and two, they can also save a lot more money through their business than they can individually. And what I mean by that is, in an IRA, they can only save $7,000 a year, where with a retirement plan through the business, they can save 25% of their income, up to about $50,000 or $60,000 a year. So huge difference, where even a fraction of that will save them a lot of money on taxes.
So something like that sounds complex, sounds complicated, but break it down. How does somebody kind of put something like that in place?
Just paperwork. It's not that complicated. But it goes back to the education. If people knew about it, they would do it sooner. And it's not saying that somebody has to do 25% right off the bat, because as businesses are growing, they don't have that money. I understand that, but it's getting started is the bigger thing. And until people know about it, they're not going to do anything about it.
So you're saying it can start at one level, and you can continue to add into it and
absolutely
build it up.
I can actually show somebody to get started with as little as $50 a month.
Wow. So what does that get you? Like, just out of, I know it's not specific, but kind of like a ballpark. I'm just trying to put out there. What does that get?
So the key is becoming disciplined. And the $50 a month is not going to get somebody wealthy, but it gets them started. And over time, you increase that so that, you're putting away down the road, maybe a couple $100 a month or so, and it starts adding up over time. But the biggest thing, like I said, is the discipline, because when people have money in their hands, they're going to spend it. So if they don't see it, they don't realize it's not there.
You know what? that word discipline, I think, is a super great word. It's a perfect word to use in that case. And a lot of times we do what we did yesterday. So it's about setting up disciplines and setting up routines and things that that do put you in a position for the next level of anything. And so I think that's a great concept, a great thing to talk about, or to say that discipline, even though, like you said, it's not going to make you wealthy, but the discipline will eventually evolve into something that could. Establishing that discipline. So I think it's important for business owners to, like you said, to just get something going, just get something started. And as they say, something's always better than nothing, and you got to start somewhere,
And my mentor always says, oatmeal is better than nothing.
They must not have had oatmeal. No, no, I'm kidding. I like oatmeal. So let's talk about. You mentioned earlier about term life insurance, and I know there's these different. Where there's term, there's whole life, there's universal life, and then there's all these indexed versions and all kinds of crazy hybrid type of So let's break those things down, and the difference between the really. I look at insurance, and I didn't even mention this to you, by the way, but I was an insurance agent for a while. So I kind of really understand. I was Series 6 and 63 license, had my life, health, and then I had all those things. But that was in a former life.
Don't want to admit that. Huh?
No, well, I mean, the thing is, I've always been interested in business. I've been an entrepreneur for over 30 years. So it was very important. One of the things that you said earlier was about education. And I think what I kind of, I started learning or hearing these things little by little. And, when you're in the sales world, you're hearing all kinds of different financial stories about people. And I started hearing stories about, people setting things up and putting things in place and how important that was. And so it made me curious. And so I did a lot of research, and I did educate myself on those things, and it led to me wanting to do what you do for a while. And so that for me, it was about learning things. Even if I feel like it's good to know enough about things so that you at least understand what you're doing, understand the importance, the need for it. And then you can trust the professionals like yourself to help you dive deep into the specifics of it. But you should have at least a rudimentary understanding of how these things work. And I think it does help, especially for business owners. So it was important for me at an early age to kind of understand these vehicles, kind of how they worked. And for me, everything that I learn, I want to monetize. So
I understand that.
So that's what led to me getting into that. And I honestly, like what you do, what you're passionate about, it's kind of like once you understand the stuff, you do want to share it with other people because it can make a difference. It can make an impact.
Big difference. And one of the things I tell people is anybody can sell you a life insurance policy, but how many people actually read it and understand it? Because most people, if somebody gives them or sells them a life insurance policy, they're usually looking at price. So if something comes along that's better, they're going to switch. But once you're educated, it's totally different. And here's what I'll say about term versus cash value. So the way cash value works is you're paying for two things at any given time. You're paying for the life insurance and you're paying for a savings account. So let's say you go down to a bank, open up a savings account, and they have these 4 principles. First one is for the first 2 to 5 years, there's no money going into that savings account. So let's say after 2 years, you put money in there every month, you go down to the bank, and you say you want to take money out. They tell you there's nothing in there. How do most people feel? Ripped off, right?
Yeah.
Okay, so the second one is they're only going to guarantee a 1 to 4% rate of return on their money. So if they're only going to guarantee that, they're probably not going to pay anything extra. Third is, if you want to withdraw that money, you can't just take it out. You have to borrow it at 6 to 8%. So if that's supposed to be your own money, why should you have to borrow it? And the last one's the worst of them all. When you die, they don't want your family fighting over the money, so they keep it. So if somebody knew a savings account works like that, how many people would actually want to buy that savings account? Not many, right?
Correct.
So that's exactly how a cash value works in a life insurance policy. You have those 4 principles, and it really benefits the insurance company, not the people getting the insurance. So I tell people buy term and invest the difference, because term insurance is a whole lot cheaper and you can get a lot more coverage for less money. And then break it out where you have a savings account on the side where you're in control of that savings account. So I deal with mutual funds, and that's the savings that I help people with. So it's totally opposite of those 4 concepts. So your money is credited to you immediately. You have a potential higher rate of return. You don't have to borrow the money to take it out. You just withdraw it because it's your money. And the last is, you don't have to worry about the money when you die because you name a beneficiary and your family gets that money.
Wow, that's a great way to kind of put it, and to position things in a way that people can really understand how to kind of use those things. And with insurance, it's a tool. And I think if people approach it that way, looked at it that way, and kind of structured things that way, they can see how to use that tool to accomplish whatever. And so even with
Right.
term insurance, you were saying earlier, the benefit of where we talked about getting the larger policies, and term policies are generally cheaper. And I know one of the concepts is for term, especially if you're a homeowner, is by being able to, if you own a home and you want to, something happens to one of you, you want to be able to have the house paid off and everything. So term.
Correct.
So talk about that, structuring that, even for maybe even for how that would even relate to maybe keeping the business going. What type of, is that a policy that you would recommend for people to have?
Absolutely. So the way that'll work is, God forbid something happens prematurely, you don't want to worry about what's going to happen financially. You want to make sure everything's taken care of for your loved ones. So in order to do that, you have to have enough insurance to be able to pay off the house. And the only way to do that is make sure you have enough coverage. I'll give you an example where people have insurance at their job and they think they have enough. And that's usually not correct, because at a job, most people only have 1 or 2 times their salary. So that's usually not enough to pay off a mortgage.
Right.
And that's why people need to have something outside of a job or the business, because even as a business owner, you have an opportunity to set up those benefits, but that's usually not enough to take care of everything else outside of the business.
Well, like I said, great points, and just I appreciate you breaking it down. And like I said, I think it's super important to demystify some of these things and how you use this. And I think once people realize that it's a tool and how you position it, and hey, it's not a one size fits all situation.
Not at all.
And so understanding that part of it, just like I said, breaks down the barrier for most people, and seeing the need and the importance of it. And while we're kind of talking about breaking down, there's financial needs analysis. So talk about what that is and kind of how it can help a business owner map out their actual financial goals.
So the main purpose of the financial needs analysis is basically to show people where they are and how to get them to where they want to be in the future. So for instance, on retirement, most people have never heard a concept called their FIN number, FIN, which is a financial independence number, where they have enough money saved where they can live off the interest and they never have to worry about touching their principal. So the financial needs analysis goes into detail about touching different aspects of people's lives. One is the insurance, one is the investments. Another aspect that most people don't deal with is debt. If most people didn't have as much debt as they had, they'd free up money to be saving for other things they want to accomplish. So it's a comprehensive document to show people where they are right now and how to get to where they want to be in the future.
So it's like a report card or a snapshot of things, and I think it's important to kind of know. Really, if you don't know kind of where you are, you don't know how to get to where you're trying to go. So
you'll never get there.
Yeah, exactly. So, is there any specific advice you would give to like a new business owner who might be overwhelmed with financial planning? What kind of advice would you give to someone like that?
So the biggest thing is most business owners look at how much cash they have. And that's not always the best thing, because just because you have cash in a bank doesn't mean that the business is doing well. So that's one aspect. But the other thing is, just like in personal finances, always having emergency funds set up. You never know when the next emergency is going to happen. So with an emergency fund, it just gives you an opportunity that you have cash available, that you don't have to worry about going borrowing money.
So with regards to like an emergency fund, what generally should be that factor that people kind of should say 1.5 times their salary or whatever? What do you see?
So with an emergency fund, it's really about having enough money to cover expenses. So typically you should have 3 to 6 months worth of expenses saved in case something happens, and that's typically on the family side. But even for a business, it's just going to be bigger numbers because you're going to have more expenses through a business. But the same thing applies. If an emergency comes up, where are you going to go to grab some money? You want to have something set aside so that you don't have to borrow it.
I think there's a great point to set up, and I know that's generally also one of the first stages or phases to set things up before you go into the investment phase, is kind of setting up that the ability to be able to have your emergency fund, and then you have discretionary funds for other things. But so is that kind of like a philosophy you kind of talk to people about, as far as kind of, because I think a lot of people don't know how to, like I said, it's steps. It's kind of like you were talking about earlier, and there are structured steps that a person should take. And you don't have to go from 0 to 100. You take those steps. I think you mentioned something really, really great, which is the discipline piece, which is just doing some of those things, and sometimes taking small steps obviously lead to bigger steps, but the pattern of it sometimes is more important, or just as important as anything else,
Correct. And it's always the same. It's 1, having emergency fund set up. 2, intermediate fund where you're saving something not long-term but short-term. Okay. And whether it's business or personal, it's still the same. If it's 3 years or less, you don't want to put money into the market. And then the last piece is the retirement. That's long-term. You don't want to have just that set up, because if you have to dip into a retirement plan, you're going to be paying a lot of fees and penalties, and you don't want to do that.
Well, like I said, great advice. And kind of, do you have any share a specific success story where the strategies that you've talked about kind of made a significant impact on a family's life?
Well, it's all about getting people to where they want to be and being financially independent. I think one of the biggest things is with the life insurance piece is they're worried about savings, because in a cash value you automatically have a savings account. But the problem is it's not going to get you to where you want to be, for retirement or kids' college education. So it's always about putting that investment piece together as well as the life insurance. And specifically, it's really about showing people where they are right now and having a lifetime relationship with somebody to show them how to get to where they want to be by the time they retire or whatever their goals are.
So what would you say is like the most common question you get from clients, and how do you typically address it?
The most common thing. It's really about showing the value of what it can actually do for them. I would say the biggest question is about retirement, because most people don't think about it right now. It's something down the future, but the longer you wait, the more money you have to be saving on a monthly basis. And I'll give you an example. I sat down with a client recently, and they're in their 30s. They want to retire at the age 50. So in order to do that, they don't have anything saved right now. You need to be saving a lot of money, because that's a short period of time.
Right.
So I showed them what they need to have, and it turns out they need to be saving about $5,500 a month. Most people can't afford that, but isn't it better to know now what you need than later? Because if I didn't show that to them, they may never have known what it was going to take to get to where they want to be. Now, that can always be adjusted, but the biggest thing is knowing now versus later.
And I agree with you. I think a common theme is the knowledge piece, the education piece, and just kind of knowing. And I think some people just naturally avoid things that they just don't know, but there's no way to know if you constantly avoid learning or knowing or even addressing it. So the things that's interesting is these are not things that are going to go away. And actually, like you're saying, the sooner you address it or kind of deal with it, the lesser these things are. Kind of like buying airfare. I don't know why that popped in my head, but you wait till the last minute. I just bought a last minute flight for my son. It costs a lot more money than if you planned for it 2 or 3 weeks in advance. And sometimes people can probably relate to something like that. If you plan a trip for 6 months from now, it's cheaper than if you plan it the week before.
Yeah, and one of the things is, that most people don't know about savings, but they should be saving, 10 to 15% of their income. Now, if people started when they were 18 years old, everybody would have a lot more money saved. But the thing is, the longer time you have, the less money you need to be saving on a monthly basis to reach your goal. And people don't look at it like that. They're more focused on, well, I need the money now versus worrying about something later.
Well, I agree with you, and you're absolutely right about that. And so if you were, or let me ask you this: do you think that the financial services industry has changed much since you kind of got into it when you first started?
I wouldn't say change much. Maybe things within the industry, but I think it's still the same. People aren't educated, and unless usually their parents teach them, they don't know anything about it. And some people will go and learn, some people won't. So it still comes down to the education.
Is there anything that, as it relates to, like I said, I focus a lot on my audience about business owners, and is there anything that business owners should kind of watch out for today that's different than it was maybe some time ago?
Honestly, I don't think so. It's still all the same. It still comes down to planning, because you don't want to do something spontaneous and then it costs you more money down the road.
So what trends are you kind of seeing in the investment for small business owners? Are you seeing any trends right now in that regard?
I wouldn't say with small business owners in the investments. You never know how the market's going to do, but it's more about doing what we call dollar cost averaging and putting money in every month than worrying about what the market's doing at a specific time. Because over the long run, you're actually going to be paying less if you do that, because everybody's familiar with the concept buy low, sell high. But the problem is most people buy high and sell low because they're not educated. They don't understand how the market works. Because when the market's down, just means everything's on sale and everybody should be putting in more. But the other thing is, if people are close to retirement, they shouldn't be in the market either. And unless you're educated on that, most people leave their money in there until they're ready to retire. And that's the wrong thing to do.
You know, you just said something I think is super, super important. And I don't know, I know you probably talk to people about this, but I don't know how many people do you find that actually do look at those finances like every year, do an assessment every year. And I'll tell you why I'm saying that is in one of my former lives, I had a lot of former lives. In one of my former lives, reason why, like I said, this resonates very well is I was helping people with wills and living trusts and things like that. And the importance of setting up things like that is super important, or to assess, or to, what's the word I'm looking for, to kind of take, or kind of revisit these issues on a consistent basis. Even once a year, doing an assessment like that is super important, because it's not a set it and forget it type of situation. And I think that that's something that people need to think about as well.
Correct. And I'll give you another word to throw in there: autopsy, to see how it's doing. So assessment, yes, and it's not a put it in and forget about it. The whole thing about having a manager work with you or an advisor work with you is so that you don't have to worry about what's happening with the money. You want to be in something that you can sleep at night. But the advisor there is the professional to walk the people through it. It's not okay, I did business and we're done. It should be, quarterly or yearly review, see how things are going, and making adjustments going forward.
So what do you say to people who feel like they can't afford a Howard Burkat, or they can't afford a financial advisor? How do you talk to them and show them how they can really do that?
Well, I think the key is getting to know the advisor. Everything is like entrusting somebody, but everybody is not the same price. I mean, you're bringing value to people, and that's what matters. It's not always about cost, but it doesn't mean it has to be expensive to get that knowledge.
Another great point is sometimes people don't, think about the difference between the price of something and the cost of something, and they are two different things. They sound like the same, but they're not. But I think it's important for people to, or why don't you? I want you to let people know that that they can sit down with someone like yourself. It's not going to, you're not going to take too much of their stuff.
and to be honest, it really doesn't cost anybody any money to sit down and talk to me. The advice is free. I don't get paid by the hour to sit down with somebody. It's all about showing people the value, because if there's value there, price isn't an issue. So it doesn't cost a lot to actually sit down with me.
And you're answering the question exactly the way I wanted you to answer it, because I think sometimes that is a mental barrier for some people thinking about those things. And so I wanted you to talk about the fact that, yes, we usually sitting down with a financial advisor is not going to cost you anything, and they're not charging you up front for whatever. I'm sure it still works the way it did when I was in there, that you get your money on the back end, or you by helping someone, and it's really about providing value, like you said. And I think if people understood the fact that it's not upfront that way, then they probably would approach it a little bit more. And honestly, it doesn't cost them to sit down and do an annual review with you, right?
Somewhat true, because there are people who do charge a fee to sit down and talk with people. Not everybody, but you have to get that information up front. Meaning, some people are going to do an initial consultation. Some people charge by the hour. Some people charge based on how they help somebody. So everybody's different. Mm-hmm. But it's really finding out up front. And to me, it's still all about the education. You get the information out there and show people value, they're going to do business with you. So there are some people that will charge up front, but you have to get that you have to talk about that up front, what it's going to cost.
So what's Howard?
It's free. I sit down with people, and the whole focus is to educate them. If I can show them, if they switch to what I'm showing them what to do and it's going to benefit them, that's the whole purpose of sitting down with them. It's not about how much money they have to spend. It's showing them how to get to their goals and dreams, and they're comfortable with the results.
All right, and I want you to say that one more time. So, to sit down with Howard, give all the advice that you have, all the knowledge, and how you can really help someone sit down or set their life up. How much does that cost again?
It's free. Or, what some people like to say, it's not free, it's complimentary. And instead of charging a fee, it's just providing referrals.
So you guys heard it out there. Hey, Howard can help you out. It doesn't cost you anything to sit down and talk and get advice. And I think, or just to get that. And sometimes people don't always see that value in just getting the advice and getting the knowledge to get things set up, and finding advisors like yourself that can help them position themselves, even if they're not at a point where they can take advantage of it at that moment. But kind of knowing helps you to prepare for what you'll do in 2 months, 3 months, 6 months, or at that next level. So I think it's important for people to make appointments, sit down with you, and find out what they don't know or what they need to know.
Correct. And I always tell people it's not whether they have a lot of money now, but you have to plan in advance. Because when people get money, they should already have a plan in place, not trying to figure out what to do at that point. So even if people can't afford anything, most people can free up $50 a month to get started. And that's all it is, to become disciplined to reach their goals.
The great nugget. And so, Howard, outside of finances, are there any kind of we'll talk about hobbies or personal things, anything else that you do that keeps you grounded or focused?
Well, what I'd really like to do, I haven't done in years, but it's auto racing.
Auto racing? Wow. Okay.
Yeah, back in high school, spent a lot of money on cars and was doing street racing.
Wow.
But right now, biggest thing, I would say just concerts going to. Most of the people I listen to for music are getting really old. They're in their 70s and 80s, and they're not performing anymore.
The good music is not. that's what I like to say.
Depends who you ask.
Sometimes it's just hard to listen to some of the newer stuff out there, honestly. But let me ask you this: is there one piece of advice that you've received in your career that you would share, and how's that kind of shaped you for helping others?
I would say the biggest thing is most people don't plan to fail, they fail to plan. Meaning, even though people don't want to sit down and talk about putting together a plan, they actually have a plan in place, and it's not going to be where they want to get to.
Wow, that's very that's very profound, actually. Definitely. Like you said, not making a plan is a plan, but not a good one.
Right.
So with that, we're going to move into our Pitch Perfect segment. And so what we did is we have listeners submit their information for feedback. And so somebody had a question for you, and one of our listeners wanted to ask, what's the first step to setting up a solid financial foundation as a new business owner? And so, Martin, why don't you dive into that?
Well, I would say it's the same as an individual. So when building a house, it's starting from the ground up. And in order to have a good foundation, it starts with the insurance. The life insurance, because you never know when your time is up, unfortunately. So you have to be prepared on that end. Because if somebody dies, there's no more money coming into the household. So you have to make sure short term is taken care of first, and long term is more about the investing. Because you're not going to have a lot of money in the beginning. It's going to take time to accumulate that. So you have to start with the foundation, the life insurance, and then build towards all the other goals.
Great advice. And so let me ask you this, Howard. If someone wants to refer clients to you, who is your ideal audience? Or which industries or professionals do you work best with, and how can they benefit from solutions that you offer?
So it's really not about industry. It's really just about helping people. Ideal clients are kind of anybody. I mean, a lot of professionals are looking for more affluent clients. That's not what I'm about. It's all about helping people. It's not about how much money they have.
Well, so the that, like I said, that's also a great thing to know. But and I think, like I said, you're kind of breaking down some barriers that stop most people from moving forward or sitting down with someone. And I think I'm hoping that people are hearing that the approachability that you have with sitting down with them and talking to them and helping them put things in place. And so that's kind of leading me to our mindset minute, where I kind of close out, or as we're closing this episode. As entrepreneurs, our greatest asset usually is just our business. So it's the vision we have for the future, and protecting that vision with the right financial tools is critical. So remember, preparation isn't just about surviving, it's actually about thriving. And so taking action today is really kind of what we're talking about, safeguarding things for tomorrow. And so Howard, I want to thank you for sharing your expertise and insights. I'm confident our listeners now have a better understanding of how to safeguard their businesses and really build their financial security. And so, again, it's been an absolute pleasure having you on the show. And so for those listening, where can they find you online and learn more about the financial services that you provide? So
online, typically, my social media is just my name, Howard Burkat, Burkat. That's really about it.
All right. And so, again, thanks for sharing. And for all of you tuning in, if you want to keep up with me, Max Fortune, and stay connected with the Mind Your Business podcast, you can find me on all social media platforms at Mind Your Biz Expert, as well as on YouTube and all the major podcast platforms. So make sure to like, follow, and subscribe, and keep the conversation going. And as always, we'd love to hear from you, submitting your ideas and questions, and even topics for the Pitch Perfect segment. So again, you can reach out to us on social media. We love that. Make sure you continue to engage with our community, and let's continue to build together. Until next time, stay sharp, stay focused, and always mind your business. See you in the next episode.